So what's a down valuation? Well, a down valuation is when a mortgage lender sends a valuer to a property. Say that you've agreed a purchase price of £400,000. If the surveyor thinks that the property is only worth £375,000, he's going to mark it down. So on his report, he's going to write that the market value of the property is 375. So even though you've agreed a sales price of 400, it's been downvalued by £25,000 to 375 because the surveyor cannot find any other comparable evidence to support the fact that the property's value is 400. So he's downvalued it. So the mortgage lender will now only lend you whatever percentage, say 75% of 375, not the agreed purchase price 400. So what does that mean for you? Well, there's two options really. You can put another application in through a different lender, but it's more than likely that they'll get a mortgage valuer from the same panel and the same guy will go out and he'll still think it's worth 375. So let's just say for argument's sake that the guy with the Royal Institute of Chartered Surveyors accreditation is correct and the property is really worth only 375. You've really got a good cause to go to the vendor and say, hey, look, you know, an independent person with credentials thinks it's worth 375. Can we agree on 375 and we'll get this going? And you either reduce the purchase price or the sale falls through. It's as simple as that. Well, there is another option. You can stump up the extra cash for yourself, which isn't necessarily a problem because sometimes surveyors get it wrong. Vendors want a particular price and purchasers are very keen on that property. So it's absolutely fine to disregard what the valuer says and pay a little bit more to secure that property. But whether you do, that's completely up to you, of course. The surveyor thinks it's worth X. If you want to pay a little bit more for it, that's absolutely fine. You can agree whatever you like, but the mortgage company will only lend a certain percentage based on what the valuer has told them.